Good evening, everyone. Hope you all have been well this week. It is a end of week remarks video, so I'll immediately start with my PnL. I am up 2.5k this week, 2,500 USD. Not too much in terms of PnL, but overall the week has been really good. So let's just quickly go over the trades one by one. Let's start off with odd USD. Very simple trade. Okay, very simple trade utilizing the trend from previous week and the open of the week triggers. Take a look at this. So downtrend previous week. This is the high that created the last lower low. Open of the week, market makes local higher highs and higher lows, takes out that high. Okay, have a look at this. So it took out that high and then broke the market structure. Now, this was not enough for us. So we waited and then the market broke below the last week's low, which was our final trigger. We always wait for two candles. Well, we tend to wait for two candles. And then I placed an order above this high and it got filled immediately. Very cheesy fill, by the way. And then immediately went to target as well. So again, just a 2 hour kind of process and it was done. So I'll show you on my terminal. So you can look at that. There's the fill, there's the close, done. Okay, simple trade. Could have taken it lower because you can see that the market didn't stop at the 1.2x extension. It actually went to the 1.5x extension, but I didn't want to. One of the biggest reasons for that is if the low of the month is in, okay, then there was a high probability that the market could bounce off of this resistance level, which was turned to support. So again, I did not expect a run in of the resistance like that, but it is what it is. We got our target, we got our trade. Moving on to the next one. Next one is US 500, which is S&P 500. S&P 500, very simple. So the idea on S&P was to buy any break of market structure, okay, any pullback after this break of market structure. I am surprised of how well behaved in US indices were this week. We're extremely surprised by their behavior. It's almost as if price action has changed. Anyways, so this is Friday, okay? Friday the drop happens, takes out the sort of provisional low of the week, and immediately upon this week's open, we have a high, high low, high. Again, we've got our weekly triggers. We know that the trend is to the upside. So we did what we should have done, right? We bought that low. I actually ended up entering a bit early, so I entered there, and the target was the weekly 1.2x extension. Why the 1.2 extension, 2x extension is not the high? Because again, strong uptrend. We change our targets and entries based upon the market conditions. Okay, so there was the entry, right? It should have been there technically, but I entered there. Gave myself a bit of a breathing room, a sort of buffer with the stop loss. So you can see technically the stop should have been anywhere in there. Okay, but I decided to go for the low of the week and even gave it a few point buffer. Okay, just because how volatile this week could have been. It was volatile, not too much movement, but a lot of volatility. So this is one of the reasons why I decided to give it such a big buffer. Okay, and that is the 1.2x extension. You can see that we front run our targets. We always do, just to be safe. And that was it. Nothing much in this trade to discuss. Okay, it's a clean up trend. Market decides to take out a key low, breaks market structure not once but twice. So we enter on a pullback and bang, high is formed. Again, you could say that I could have maximized my targets because since we were already above the previous month's high, we could have taken it to the since we were already above previous month's 1.2x extension, we could have taken it to the 1.5x extension. Yes, in hindsight, yes. Okay, but I do not have enough data on what could be the probability of the market hitting that 1.6. Okay, sorry, 1.5. So I don't really want to take that risk. Moving on to NAS. NAS was a bit more structure based. Okay, when I say structure based, it is what I mean by structure based. Okay, this is resistance. This is the breakout attempt. Then we have a high sweep and a low broken. Now keep in mind this is an uptrend. Okay, In uptrend, we look for low sweeps and high broken. We do not look for high sweeps and low broken. So what I thought was, if this market prints a long signal, I would target the high of this. Basically, I would target this high because a lot of stops would be resting in there, and it would make sense to target that high. So, and that's what happened. So Friday we have this low being taken, key low in my opinion, and then Monday upon the open, immediately we have a break in market structure. Right? That's upon the market open this week. Have a look at this. So Friday takes out that low. Monday open, clean break in MS, and we have what? We have closed above the previous month's high. And we have closed for 1 and 2 candles. In fact, the third candle as well, straight above the previous month's high. So again, decided to go for a pullback. Again, this time the buffer that we give ourselves with the stop actually came in our favor. So imagine if we went with a traditional stop, all right? Or imagine if we went with a textbook stop. So we went there, right? Low of the week should hold. It could have been taken out due to slippage, may not. Okay, stops in there would have made sense, but then again, I expected a lot of volatility this week and a lot of ups and downs, so I gave it a big buffer, and that went to target immediately. Technically, again, we could have maximized our gains by going up there. Wow, that would have been a 4-hour trade. But once the S&P hit target, I basically closed my trade. Okay, it was 12:30 or 1 a.m. in the, well, you could say morning, 1 a.m. in the morning. So press conference itself happened at 12 a.m. and after the press conference is where the target got hit. You can see there. So it's about 12:30. Okay, too late in the night for me, and too much mental stress for me to keep it open throughout the morning, throughout the Tokyo session. We know how volatile, well, I know how volatile Tokyo session can be. It can completely reverse all of your gains. So we're done with ORT, we're done with S&P, we're done with US 500. Oh, okay, let's go EG and let's go over this minus 229 USD. Shouldn't have taken the trade, but let's have a look. So there's the EG. Now, if you remember EG, I mean, I think I'm saying this for the 100th time, that this is a range high, this is a range low. EG is in a very bad range, was in a very bad range. Initially, upon the weekly open, I said that this is a blip above the weekly previous week's high. So if we get a close back above, we would go for a long. Didn't happen. Instead, we have a lower low, lower high, lower low. I personally wanted to go short there, okay, which I did, by the way, and then ended up closing just before the news. So that's where that 0-0 comes from. So that closing before the news is where the 0-0 comes from. So I ended up closing it at the break even. Now coming on to next day, same trade, right? EG. Let's go over that trade. So you can see, I think some sort of news event was there in regards with GBP, and that led to the Euro GBP reacting like this. We finally had that break in market structure. Not that, this one. So this is the low that was holding on. And there we had a break of market structure. One mistake I did here was I should have waited for a second close. So I should have waited for a close like this. Instead, I just decided to go short because we had that impulse candle up. So I went short. Do I have it? No. Okay. So I went short somewhere in there with my stops there. And target being, again, the range low. Okay. What I actually ended up doing was I closed my trade there. I closed my trade somewhere there. That is why you see minus 220, minus 229 and not minus 350. Okay. So that's it for the trades. Now let's go over why I said that the PnL is too low. So the PnL is only 2.5K. Now that is just 2.5% off my account. So with such a good week, right? I think we made about 6.5 hour this week. 6.5 hour this week. My risk average per trade is $350, which is only 3.5% off my account. Now, why was I only risking 3.5% of my 0.35% of my account? Very simple. Past performance has been really bad. One thing. Second, this week was completely packed with a lot of events. So with that, it's about 6.5 hour this week. This could have easily been 5K, but due to the low risk, we only have 2.5. Well, that doesn't matter. What matters is that we've had a good week, except for this trade, which again I say should not have been taken. Okay. So yeah, 2.5% gain this week. Last week we lost about minus 1.2%. So that's a good recovery and some gain on top of that. Going forward next week, I'll bump up the risk. So I'll bump up the risk from 0.35 to 0.5, right? And then if we stay positive for the next week, right, which we should, I'll bump up the risk to 0.75%, which is my max risk on any given funded account. Okay, be it challenge account or live account, I do not go for a higher risk than that. And reasoning for that, I'll explain in any other video or a concept video. So that's it. Bye.